See, let's focus on the tyre industry now. Raw material prices in particular, rubber prices have seen a sharp fall in the first quarter. How does this rub off on the tyre players? Are price hikes on the cards? Is the export business taking a hit due to global turmoil? Let's discuss all of this and more with Arnab Banerjee, who is the Managing Director and CEO at Ceat, joining in. Arnab, too many moving parts. On the one hand, we have rubber prices which are lower, but on the other, a large part of your raw material also is crude linked. Crude-related, spikes that we've seen, close to $77 on Brent crude right now. And there is a fair amount of global uncertainty as well. In light of that, what's the kind of outlook that you have in the very near term when it comes to margins and global demand?
Good morning for having me here. So you're right, the crude prices have tapered off from quarter 4. But again, it is kind of inching up because of the uncertainties. Rubber prices in domestic have been rock steady. There have been no erosion of rubber price at all. It has been swinging between 197 to 200 rupees per kg. International prices have come down to about $1,650 per ton. So it's a mixed bag and we carry inventory. So the impact of raw material prices in quarter 1 vis-a-vis quarter 4 will be marginal at best, slightly lower definitely. As we go along, if the global uncertainties, geopolitical uncertainties don't play out in an adverse manner, we can expect some tapering down in quarter 2 as well.
All right. Hi, Mr. Banerjee. Good morning and good to see you. And I recall you said that the benefits of lower input costs will start trickling in from quarter 2. But with the world in an uncertain place, do you still believe that we'll see margin improvement from quarter 2 onwards, the gross margins, EBITDA margins? And also, give us some clarity. The government has recently imposed a 5-year anti-dumping duty on imports of insoluble sulfur that's coming in from China as well as Japan. Does that have an impact on your business? And were you importing from both these two countries?
Insoluble sulfur is a small portion of the entire cost structure. So, yes, it will have an adverse impact, but not really significant.
Okay.
But as I mentioned, and I'd like to repeat that there'll be a slow taper off of the raw material situation because of inventories, and the trend keeps getting upset by new developments, as you have seen. Now, freight rates may also move up because of this uncertainty. And the crude has inched up. So if these things normalize, we still hold the view that the raw material should be very, very gradually taper off in quarter 2.
Okay. All right.
And what about demand? Because, domestic business, you were hopeful of double-digit growth. Has that happened so far in the first quarter? Exports, because of the uncertainty geopolitically, are they taking a hit? What's your target for the next couple of quarters and the entire year?
Yeah, I have been mentioning that for the entire year, we still look forward to a double-digit growth, as I've been mentioning at the beginning of this year. Last year, we had a double-digit growth as well. It's a mixed bag, the demand. Let me first handle exports. As I have been saying that given our situation or market share in various markets in exports, moment we get a better access to a market, we keep growing. So for us, the tariff, of course, has to play out, and we need to know what happens to the tariff. But we are not seriously disadvantaged with other exporters. So we expect US growth to come back in quarter 2 or maybe in quarter 3. US doesn't impact significantly at this moment because the contribution to our overall turnover is very, very low. Europe is very big for us, and we expect to grow in Europe. Latin America, Middle East, these are big markets for us. We expect to grow. So it will be a mixed bag, a little bit up and down. So quarter-wise, we cannot say, but for the full year, we're looking at good growth in exports. Domestic market, I think if you see the OEMs, it's again a mixed bag. The growth is slowing down in two-wheelers. There's no growth in passenger, and there's no growth in commercial vehicle segment as well. But as the new models come off the assembly lines of the OEMs, we have visibility of new fitments that Ceat will be getting. So we expect to grow in OEM vis-a-vis last year as far as this year is concerned, starting from quarter 1 itself. Replacement demand, again, passenger is muted. Hardly any growth in passenger vehicle segment, four-wheelers. Two-wheeler growth, which is led by rural and small-town urban, is doing fine. Scooter is doing better than motorcycle. The GDP growth, as long as it is 6-7%, we are fine on the truck segment as well. So I would say replacement is looking reasonably good.
Okay. Mr. Banerjee, good morning. Prashant here.
Hi.
So basically, you've told us many times, right? So exports and consumer, these are the two areas where which are attractive and better profitability segments as well. Exports you've already spoken about. Consumer, I think. Overall, I mean, it seems it's a bit of a muddle through over the next 12 months or so. Would you agree? I mean, I was looking at data which just came out. I think it was about a month ago it came out. But after our last conversation, the sales of luxury cars, for example, fell for the first time in 20 years in 2024. We all know what's happening as far as EVs are concerned. So a bit of a muddle through. Is that the right way to look at it?
OEM situation, the data is there up to May, so in public domain. So there's no growth overall, and you're right, the top-end car sales also have tapered off. But we are dependent more on replacement. So the replacement volume is also stuck close to zero. So that is of more concern. However, here, because of 8-9 cornered fight, there is a market share play that will play out over the next 12 months. And we are very much, our strategies and tactics are in place to gain in specific geographies, in specific shares in replacement. And in OEM, our share will increase because of new vehicles coming out with Ceat fitment, which has got nothing to do with the overall growth of the market.
Okay, I've got that. So maintaining double-digit growth for the year, and we'll have to of course, watch the overall tariff situation, etc. closely. Freight costs perhaps a little higher, especially for imported raw materials. Thanks very much, Mr. Banerjee. Appreciate you joining in, and good speaking with you as always here on CNBC.